along with Kayla, who's a mortgage lender. How you doing today, Kayla?
I'm doing great. How are you doing?
I'm doing good. So we have a couple of questions for you, getting to know you as a mortgage lender. First of all, where are you from?
I am from Chesapeake, Virginia, so local 757.
What? Okay, that's good to know. And at 21, what were you doing at the age of 21? That's correct.
At 21, I had just graduated college. I have a late birthday in June, so I had just started in residential property management. I was leasing apartments.
Okay. Mm-hmm. And what brought you to, or what made you become a mortgage lender?
I got into the industry from my brother's request. He definitely was a big part in why I switched roles. He's on my team now, so it's really cool to see him in our team meetings and at events and things like that. So I've got a great network of resources behind me.
Okay, and can you please explain your title in the real estate industry?
Yep, so I'm a mortgage loan consultant. So I basically take credit applications, and to start the pre-qualification process, we got to check credit, and then we go through and verify employment, assets and liabilities, things like that, to get a pre-qualification.
Now, how long have you been in the real estate industry?
I am fairly new, so I've been in for just about 4 months now.
Okay, 4 months.
Mm-hmm.
Okay, and you said you were before this job right here, you were apartment management or property manager?
Yep, so that is what I got my degree in from Virginia Tech. So I started with property management, and then after about 3 years, I switched over to a business to consumer sales job at Electronic Systems. So I was in the IT space, selling software and hardware and things like that. So that was the past 4 years, and now I'm on this side of the house. So I'm kind of back where I wanted to be in the housing industry.
Okay. And what sources did you use to educate yourself to become a mortgage lender?
So actually, I got to participate in, they call it Zenix Mortgage Academy, and it's a 3-month-long course followed by 2 3-hour-long exams, and then 4 weekly webinars for accountability. But it was great training on all of the agency guidelines, loan programs, everything you could possibly think of. So now, I just finished that up.
Or
online. So that was a little difficult. It was self-paced online courses followed by a final exam. That was month 1. And then month 2 was case studies, which took me about a month to complete all of those, self-paced, followed by another 3-hour-long exam. And then phase 3 was 4 webinars weekly throughout the month of June, basically helping figure out how to market to the database and create a network of people. So I've just finished that at the end of June. And so now I'm finally in the marketplace and really just taking loan applications and starting out. So it's been awesome so far.
Because you are definitely networking because you found me.
Yes.
That's good. How important is credit?
Credit's really important. The better your credit, the better score you're going to get, a better chance at a lower rate. So credit's very important.
A lower interest rate?
Yes.
Okay. Mm-hmm. And currently, what what's the lowest credit score that they would need to be pre-approved?
The lowest credit score we'll take is a 620.
Okay.
So that, under that, it doesn't really fit our parameters. But in order to get pre-qualified, we also have to take into account income, assets, and any liabilities. So a great credit score is the first step in looking into all of that and getting pre-qualified. So if you have a 620 or above, you're definitely in better shape than some.
Now I know something about the school, like school loans, like college loans and everything. Has that dramatically changed business so far? I know it just happened a couple of weeks ago, but have you seen an increase on pre-approvals and everything?
So far, not yet. At first, they were counting a percent of the remaining balance for student loan payments, and now it's been reduced to like 0.5%. So it can make a little bit of a difference when you're looking at the debt to income ratio, which is a factor that we have to consider when issuing a pre-approval. So it helps reduce liabilities by a fraction, but so far I haven't really had anybody that we've had that would benefit from that. And that's the factor that makes their loan approved. It's really more on the back end, but it can help. It can be the deciding factor when you are that close.
Because I see a lot of people saying the reason why I seen a thread on Facebook, and they were saying why they're not homeowners, and they said student loans. So I guess the word hasn't got out to everyone about that percentage being taken out the debt to income ratio.
Yep. And I think another part of that is a lot of people with student loans aren't able to save money right now. And you do need cash to close. We're in a market where there's not a whole lot of seller contributions and things like that for closing costs. So you do need a little bit of money in your savings account to be able to go to the closing table. So I think that's more of where it's coming from, is they haven't been able to save. They've been living paycheck to paycheck because they're trying to pay down those student loan payments.
Yeah, because I know my student loan payments were rent, like a price of rent, a mortgage. So yeah, it's a lot. And so you just mentioned closing costs. Okay, so can you explain the difference between a down payment and closing costs?
Yep. So the down payment is how much you're willing to put down towards the loan. And it's part of the closing costs. So we count the down payment, and the closing costs also include any discount points that you might be paying. You can pay discount points to lower your rate. It includes any type of seller contribution and assistance. So any fees also that are associated with just administering the loan. So origination fees, all of that good stuff is included in the closing costs. So a down payment is just a portion of that.
Okay. Now you did mention discount points. How can my clients get discount points, or how can anyone get discount points?
So anyone can get discount points. I think it's just more of explaining that side of things. You know, if we have somebody that is not too thrilled with their current rate, you can give them the option, hey, it would cost you X amount of dollars to reduce your rate to this amount, if that makes sense for you. So depending on how long they're planning to keep the home, I definitely recommend paying down the rate if the funds are available.
Okay. Now, is there any programs for first-time home buyers? If so, where can they go to look for these programs? You know, you as a lender, I know you can mention it to them, but where can they go to look in educate themselves?
I would say on the Freddie Mac and Fannie Mae websites online for first-time home buyers, there are a lot of programs available, and most lenders offer the same things. So I know there are grants and things like that associated with it. There's income limits and qualifications to that too. So it really just depends on the buyer, but I would start just by going online and Googling, looking for Fannie Mae and Freddie Mac's guidelines. Those are for conventional loans, just to see what they may be offering at the time, because it's constantly changing.
Okay. And with your education and knowledge, what is the best loan to you? Like conventional, FHA, or what's the best loan?
So it really just depends. I would say if it's military, I would go VA all day. I mean, they offer so much stuff to military. And then if it's someone that is thinking they have a lower credit score and they are still they really want to see their options, we typically go FHA for that. They provide more assistance for lower credit scores, and they help get people really where they need to be. So FHA, I would say, for people that are a little bit more worried about qualifying because their credit. And then conventional, they're going to always be the standard. So if it's not someone that has lower credit and it's not military, I'm generally going to recommend conventional.
Okay. Now, in your opinion, would this be a good time to purchase a home?
Yes. I think it's always a good time to purchase a home instead of paying somebody else's rent. Get something in your own name and start building your own equity, because that's the first step in creating generational wealth, is really having something in your name.
Now, since I know you say you just got on, but what's your most memorable moment in real estate? Well, since you became a mortgage lender.
So far, I haven't really had anything crazy happen to me yet. So Stay tuned. I'm sure I'll have some stories for you soon.
Okay. And what documents, so that everyone know, what documents when they first talk to you would you need to pull everything to get them pre-approved?
Okay, that's a great question. So we always need 1 month of most recent pay stub history. And then we like to get 2 months of bank statements, and then 2 years of W-2s. So if you have those things, that's going to help expedite the process.
Okay. All right. And what are your goals for 2021?
For 2021, my goal is to close 15 loans by the end of the year. So I know I just started, I'm a little new. We're halfway through the year, but I think 2 loans a month until the rest of the year is doable, and I'm going to definitely aim towards that.
Yeah, that is doable. And how can anyone contact you, Kayla?
So you can call me, beat me anytime on my cell phone. It's 757-617-0272. I use that for work. So if I am on the beach on the weekend, I will always answer, and I'll just let you know what's going on. So you can access me anytime. I'm always trying to be very transparent and let you know when I can get back to you. If I can't do it immediately, you'll know when, but you can always call or text, and I'll keep you in the loop. And then also with my email, I have that forwarded to my phone as well. So I'm constantly checking that on the weekends too. But it's kayla.lee@afglending.com. And that stands for Advanced Financial Group. So yeah, I'm always open. I've always got my phone on me.
Okay. Because I want to ask you, let them know what company you represent.
Yep. So I'm with Advanced Financial Group, and we are a town bank company. So we have a lot of their resources.
So you're a part of, you're associated with Town Bank?
We are a subsidiary of Town Bank. Yep. So we're one of their companies. Okay,
good to know. And thank you for your time, Kayla. And as always, it was a pleasure.
It was such a pleasure. Thank you so much.
It feels good.